TTM trades. I just wanted to record a quick video on ticker SPY. My last video I posted was pretty much talking about how we knew this push up right here was a fake out, and we would continue onward into this downtrend as we begin to lose that momentum here on that 30-minute chart. So just kind of went over that. You can see we're still in this choppy movement, up, down as we head lower. It looks like, from my perspective, this choppy up down. In the futures, the market is running down, and then when it finally opens, you get this gap down, and it looks like it's running back up. And as it's running up, there's a lot of shares being sold off, and then again in the futures, you get another gap down, and again it runs back up when the market opens, filling the gap, and then you get another huge sell off, as if it looks like someone's just dumping shares back and forth. But that's on a 30-minute chart. So just moving forward, looking at SPY, where do we go next? We got all the signs in the world. The RSI crossed over. It's short-term and long-term average. You can see when we was in a strong uptrend, the RSI got the cross and it's been holding ever since. Finally got the cross over here. Then as you can see, when it tried to get back up and above right here, immediately got rejected, and it's been getting rejected each and every time on those run-ups. Not only did the RSI cross over, the PMO slowed down, started flattening out here, giving us a forewarning, then finally crossed over. And this crossover is short-term, and at the pace, the rate it's moving, it's definitely going to cross down into its long-term average right here, that red line. Now, we are still in bull territory, and what I mean by that, we are above the zero line. All right, so just keep that in mind. Doesn't mean we're going to go on a dramatic downtrend. That does mean that as long as we're staying in this bull territory, we're going to play within the daily charts bands, all right, where we can get our next lines of support. And then you can see here the PMO, not on the PMO, but the Bollinger Bandwidth is consolidating again. Volatility moves in cycles, right? Consolidation period, breakout period, consolidation period, breakout period. All right, this has been a wild swing, breakdown, excuse me. Then you get a wild swing back to the upside, so the volatility was very wild during this time frame, and now you can see that the volatility has settled down as we consolidated in that 390 to 394 range for give or take about 2 weeks. You can see the bands were starting to constrict around the price action, showing that upside momentum was slowing down. All right, so you can see we're in a consolidation period, which means we're about to head into you can see the volatility picking up. And just from looking at the RSI and the PMO, we're about to go into a breakdown period with high volatility to the downside. Okay, so I'm looking at the 383 right where the dailies charts middle Bollinger Band is at, to 381 where the 150 SMA is at. So we're looking at 381 and 383 possibly here in the next day or two. I give it to Wednesday at the latest, and then from there we'll kind of see where we go from there. If we do break through that 383 to 382 range, then now we're looking at that 377 where the bottom one standard deviation Bollinger Band is at. Now, you won't see me start talking about us going to a major correction until we get below that bottom one standard deviation, okay? Because what is true for an uptrend is anytime we're in a strong uptrend in a double Bollinger Band strategy, we will hold above that middle BB. And if we're in a very strong uptrend, we'll hold above that top one standard deviation. And every time we need to get a slight pullback, we'll hit that middle BB, start the next leg up, middle BB, start the next leg up. If we get a deep pullback, we'll pull back down here to the bottom one standard deviation and then get another run up. So, this is a general area where we like to look for pullbacks and get better entries. All right. Now, typically, if we get below that bottom one standard deviation, then that sets us up to go into a downtrend. But you see both times back in September, each time we got it below that bottom one standard deviation, it kind of consolidated, and then we ran back up, another double bottom W pattern, got below it, consolidated, ran back up. So if we get below 377 to 378, then I'll start taking a harder look at the ticker SPY, and where we might be going. But right now, that 382 to 383 range is where I'm looking at going into Wednesday. If that fails, then we're looking at 377 to 378, but very possible. As you can see here, the 2-hour chart is breaking down, and that momentum to the downside is starting to pick up, and you're about to get a breakdown here very soon. Just looking at how the Bollinger Band is about to break out, and you're seeing the PMO and the RSI lose that momentum. And we are below that bottom one standard, as I was just talking about here on the daily, on the 2-hour chart. You can see the price action when we, very strong uptrend on the 2-hour chart, pullback. Even when we gapped down, we hit that bottom one standard and tried to rally. We tried to get back above that top one standard deviation to get back in the uptrend, and immediately got rejected. And then we broke down below that bottom one standard deviation. You can see the price action try to rally back above it, and as soon as you get to that bottom one standard deviation, you get a sell-off to show that rejection. So this setup right here just says we're going to continue this downward movement, and it's probably going to continue on the futures market tonight. And I won't be surprised if we get a gap down to that 384 range to start tomorrow off, to test that 384 to 382 as we was just talking about. Now, overall, we're still in a day-to-day uptrend. Looking at the daily chart here, ever since we had that dip back in February of March of 2020, we've been on a very strong uptrend, and that strong uptrend pattern again, that middle BB holding, very strong uptrend holding above that top one standard deviation. Has some deep pullbacks like we just talked about, but again, continued the run up. So right now we've been holding puts for about a week and a half, aiming for that 382 range, looking to close out those puts once we get back down here into that 382 to 377 range. We're definitely going to continue this downtrend. And then from there, if the 2-hour chart starts to correct itself, then we will start looking at trying to lock in at one of these support levels sitting around 377 to 384 in that range. But again, let's also look at one more thing, the VIX. If you look at the VIX, the VIX is setting up for a very strong rally, okay, which shows that big time hedge funds are hedging their portfolios, and the put to call ratio, there's more puts being bought, which the VIX is starting to reflect that. And you can tell that there's a lot more hedge fund managers or money managers, hedging their portfolios. So the last time we got a rally like this on the 2-hour chart, you can see here, SPY was in that nice upward trend. You can see the VIX was getting more calls than puts. And then you see this sudden surge, and it gets the PMO above both its averages. And then you break out in this high volatile state. And this is where the S&P 500 had that strong dip back in early February. So if you look again, the S&P has been rallying, hence why the VIX is trending downwards, that momentum to the downside. And then you can see here the PMO starting to flatten out, and now it's picking up speed to the upside, and it's coming out of this bear territory, hence the red background. And now we're in this bull territory, and we're creating higher highs on each run up. There's a high, higher high, pull back, and then just based on what we see tomorrow with the SPY pulling down to that 384 to 382 range, it looks like this momentum to the upside for the VIX is going to continue. You're probably going to get a breakout here again with another higher high. So all signs point to the market moving downwards tomorrow, that downtrend continuing. So if you are holding calls, I would probably close those out. It may be a little too late, but definitely we're taking puts right now to the downside, and we're looking at, again, I know I keep saying it, that 384 to 377 range. We want to see if the daily chart stays within its bands. If we do break outside the bands on the daily chart, then we'll reference a higher time frame to see where those support levels is at. And this is where we get into the weekly, where you see that bottom one standard deviation on the daily is sitting at 377 to 378. That is the weekly chart's top one standard deviation, to show that the SPY is still in the overall uptrend on a week-to-week basis, even though we're having these pullbacks here and there. but we are still in that strong uptrend from February 20th on a week-to-week basis as we hold above that top 1 standard deviation. Now, again, like I said, if we break below that bottom 1 standard deviation, then that leaves room to dip down to this 350 area, which is very extreme. I wouldn't bet on that right now, but that 354 to 358 area would correlate with the weekly's chart middle Bollinger Band, which I'm pretty sure we do dip down this low. Some buying will come into play, and this would be a good area to buy in to continue the next leg up from that 358 to 360 range. So TTM trades, till next time, the future markets are probably more than likely going to sell off tonight, and we'll probably start the day off tomorrow with another gap down. Till next time, TTM trades.